Welcome to accounting. So these tutorials that I'm putting together here are for students who are having a little bit of difficulty in accounting, especially with debits and credits, and how debits and credits fit into accounting and exactly what they are and so forth and so on. And really these tutorials are meant to give a little bit more detailed information in terms of using debits and credits. It's like a new language. It just takes a little bit of practice. It's not a big deal at all. But hopefully these tutorials will help you to overcome these things called debits and credits. First thing I'd like to do is I'd like to define accounting. And really all it is some systematic way of recording transactions. I mean, that's all it is. Okay? Some systematic way of recording transactions. Doesn't matter what kind of transactions. They can be very complex. They could be derivatives or bonds or stock or doesn't or fuel or food. I mean, it doesn't matter. It's still transactions. Okay, so we have to kind of get an idea what those are. Then we're going to get an idea of how accounting records these transactions in a systematic fashion. And guess what? We have accounting. So let's start with transactions. And let's use, we'll use some daily transactions that we're all used to. And I don't know, fuel is certainly one. Food, I guess, would be another. I don't know, going to movies, I guess, would be one. Maybe you take your car to a mechanic, get it repaired. I know we're talking about a lot of cars here, but how about a car wash? All right. How about getting your nails done or your hair done? Okay. All right, you get the idea. All transactions, books. Ooh, shopping. Okay. A lot of people I know like shopping. Okay, anyway. All transactions. The deal is here, I'm going to add a little bit of something here to these transactions, that they have to be of an economic nature. In other words, there has to be some sort of an exchange here. Okay. Now I'm going to put a dollar sign up here, but it's usually in our modern, economic society, it's going to be some sort of currency. It's not going to be dollars, but some sort of currency. But it could be anything as long as it's an exchange. Prior to currency, there was something called barter. Okay, barter economy, where if I had sheep and my neighbor had wheat, and I wanted wheat to make bread, and my sheep wanted something for sheep, I don't know. But I wanted wheat, my neighbor wanted sheep. And we would do this exchange. I give him sheep, I get the wheat. So any type of an exchange will work. Okay, well, here's something that won't work. I go into a bookstore, and let's say I do like a pre-order. So I'm going to pre-order a book. All right, and the book will be here in 15, 20 days, whatever. That's not going to work. There's no exchange. There has to be an exchange. In other words, I give, in this case, currency. I go to my gas station. I give them currency. I get fuel, and I'm on my way. Okay, so transactions. All right. Now let's go to recording of those transactions. So we'll put this back up. We'll put this systematic way we're trying to get to here, and we're looking now at the recording part of our transactions that we just talked about. Okay, so we talked about this. We're going here. Now in accounting, we have something called a T account. And of course, the reason why it's called a T account is because it looks like a T. Those are what we call these T accounts here. These are graphical representations of an account. Okay, so now we got to get a little bit deeper into what an account is. Because remember, the T account is just a graphical representation. Now, in other words, you don't go walking into your place of employment tomorrow and you decide to walk into the accounting department because you got this like newfound knowledge, and you go ask them to see all the T accounts. They're not going to show you T accounts because it's just a graphical representation of an account. So I don't want you to get the wrong impression. But we use this in accounting, especially in illustration purposes, instructional purposes, analytical purposes. This is great. And in later tutorials, I will show you what an actual account does look like. But it's not going to be too much different than this. It's going to have more detail and more lines and more form, and it's going to look prettier and all that. Okay. So this is an account. Let's give it a name. All these accounts have a name, and let's call this one the cash account. Okay. Now, all an account is a tracking device. That's all it is. It's a tracking device. So in other words, all those transactions we talked about, look, we can have T accounts for all of them. Okay. Fuel, food, repairs, okay, maintenance. I don't know if I'd have a movies account, but maybe an entertainment account, so I could stick movies and other stuff in here. Okay, so it's just a tracking device. The beautiful part about this is that, look, at any particular moment, I can get a balance. I can get a balance in these accounts. And that is part of the beauty behind accounting. How much do you spend in fuel every month? How much do you spend in food every month? I don't know. I mean, I do know, but because I do have an accounting system for my own personal use. So at any moment, I can tell you exactly how much food, how much fuel for every month, for a year. I can compare years. I mean, that's the beauty behind accounting, is that in any particular period, I can tell you how much I spent in fuel and food and repairs and so forth. So that's all an account is. It's a tracking device. We give it names for whatever we want to track. Now, I just want to talk briefly about this cash account, because when I talk about cash account, the first thing that people do is say, oh, I gotcha, because I got a bank account. And no, that's not exactly what I'm talking about. You can have a cash account in accounting without having a bank account. I can have my money in a refrigerator, in a freezer, in a mattress. I don't need to have it in a bank, right? I don't. Just banks are much more efficient and certainly more secure, and that's fine. But I don't have to. But that doesn't mean I don't have a cash account, because remember, this is accounting. So in accounting, I can track, or should track, every transaction, and cash is a good part of a lot of our transactions. So of course I'm going to have a cash account in accounting, but that doesn't necessarily mean I have to have a bank account. Now, of course, in most people, I think people stop saving money in matters, although I don't know. But it's independent of one another, okay? Even if I don't have a bank account, I can still have a cash account. All right, I hope I made that clear and not confused you with that. Okay, so here, look, we're now looking at the systematic recording, okay, of these transactions, and we know what the transactions are now. We know what we use in accounting to record those transactions. Those are the T accounts, or an account, and now systematic, and I'm running out of time, so the next tutorial will talk about this debit credit as a means of systematically recording these transactions. So I will see you next time. Bye.